to go over some stocks. It's Will Rich here. And the analysis that we're kicking off here on Monday because of the holidays, our Sunday stock talk. And it's fitting because Labor Day is about work in progress and the pursuit of a goal. So Earl Nightingale once said that success is the progressive realization of a worthy goal. And sometimes the market feels slow, like recently, or fast, but progress in trading is very simply the same. Just like kind of like a mason builder of a house or a tower is going to put one stone at a time, one day at a time. We want to place each block with care and not do it haphazardly or it crumbles. And today we're going to look at how the markets are setting up. We're going to go into BigBear.AI. We're going to go into some other companies. And one day at a time, we're going to build this financial tower stronger. And we're going to do it one brick by brick. There's a great quote by Will Smith who says, the best way to build a tower is like when he was growing up and his dad owned a spot and they were building this brick wall and his dad said, we're going to build this. He said, no way, that's so huge. He said, we're just going to do it brick by brick, brick by brick. It's not about how many trades we make or how many stocks we look at, but just the quality of the ones that we invest in. And we're going to jump right into it. So the first stock that we had on the list, as per the thumbnail, you're going to see BigBear.AI, and we're going to jump right into this analysis. We've seen the defense market getting some tailwinds recently. If you just kind of search at defense markets, if we just search it up, we're going to see that's going to be global trade. It's going to be weapons, military, things like that. I guess this one isn't really weapons related, this stock we're going into, or anything like that. But we've seen the market growing pretty fast from a dollar perspective. We see more money putting in from the government. And we also see the big, beautiful bill play a role in this defense market. In July 2025, so just 2 months ago, it was the Congress passing the big, beautiful bill. It says $150 billion to defense market, focusing on modernizing the military, boosting shipbuilding capacity, funding missile defense, and scaling new defense technologies and industrial bases. And that's kind of where BigBear is at. So they're in a market that's growing. So we're going to jump in there. One of the outlooks we have for them is we're going to start with the ugly or the not so favorable, which is their recent report of earnings where we saw their revenue dip here. The revenue came in, net income negative 220 million. They're in a restructuring period, so it makes sense. These are the times when companies are delicate when they're doing restructuring. They recently got a new CEO. This year, they got some changes being made in how they pursue business, and that's really brought us into focusing on where they're pursuing. But the good is that they got the balance sheet. They're at 600 million in total assets, and the CEO that they recently got is here. Previously, the commissioner of U.S. Customs and Border Protection. And also, we see that he was the acting secretary of the U.S. Department of Defense, which is pretty aligned with where they're trying to go as a company. So if we look at, where they're bringing solutions, we know the modeling and simulation, they're doing some AI models for shipbuilding and manufacturing, which is kind of what we're talking about with the big, beautiful bill. They're also deploying into airports. So this week, actually, I'm flying out of LAX tomorrow. So we're going to see if their BigBear.AI technology is in LAX, which I've heard from people it is. And if we look at some of the deployments into the airports here, we could see they have it on the list here. Los Angeles International Airport, Terminal 7. I'm not sure which terminal I'm flying out of tomorrow. We're going to a quantum computing conference, but we'll be on the lookout for that technology. Same thing is when we arrive, we're going to go to Denver International Airport, which is where they are as well. We're going to be taking a look around there for that real world usage some more, as we know that they're there. We've gotten scanned there, and we'll be also ending our trip, I think, Albuquerque, New Mexico, which I don't think they're in, but we will keep an eye out for that. So how's everybody doing here on the Sunday? Let's finish up this analysis with Big Bear. We can get into some other ticker symbols. You guys got some tickers. Feel free to drop them down below. I'd be more than happy to take a look. What's important when considering, for example, this company, Big Bear, we're looking at the institutional interest really increased recently. Back in October we started covering them, and we were really looking for that institutional interest to heat up. They were around $1 a share, and we saw institutional interest heat up. We've seen them now essentially 5x from there. At one point, they were 10x up to $10 a share in February before selling back down by April with the greater market, and then they recovered back up into this $8 range and then sold back down. They've been having some downward pressure. So they've had this downward pressure. They're kind of selling off consecutive days. You see them pull down into this $5 price point. Pre-market for tomorrow, at least so far, we've seen some movement tonight. Looks like they are positive here, getting ready for tomorrow. So we'll see how they react at market open. And just a friendly reminder too, today is September 1st. So it's an exciting day. So we're moving our StockMate modeling system for how we kind of structure the payments. If you decide to do daily live sessions, we'll be going to recurring a monthly subscription. And so that's good, but it's also the last, it's the first today. So at the end of today, StockMate will no longer be lifetime access. So if you do decide that you'd like to get into lifetime access or have thought about it for a while, there is not just a sale there in the second link below, but you can also get access to our daily live trading for tomorrow and be there at market open and not have a subscription. Some of you guys might like that. Some of you guys are okay with either way. But many people get into lifetime access as a result of knowing that they won't have to pay a subscription. So maybe that's what you're looking for. Just keep that in mind. Now, I see that we're looking at this $5 support level. They're trying to break back up into this 550, 525, somewhere in here, kind of getting out of this downtrend they're in, which would be about a 5% recovery. If they get back up into this 550, we're looking for a break back up here. We'd like to see that $6 price point. But as I mentioned, still kind of watching the real world usage is kicking in, but still watching that contracts as they're lower on the revenue side of things. So it's possible they continue to sell down, but watching that $5 support level is key. And I have some long-term positions that more than likely, I would imagine in the next few, 6 months, 18 months, we're going to see the stock higher. That's why we have it, and we cover it consistently for those of you guys that are in it. CTM is off to a good start pre-market so far today. We just did a video on them earlier. They were at $1 a share, and we could maybe jump in a little bit, but you could see we're looking for this 42% jump back up into this $1.45 range. It looks like overnight they had about an $8 million investment from institutions today. You can see that green candlestick, CTM. See that nice jump. So we just actually finished a video earlier today on CTM stock just about a few hours ago. It's not really a hyped stock or anything like that, but what we liked about them was they're in the defense market and they are under $100 million market cap. And they have some institutional attracting value as they have a $100 million contract there that would put them in a good position to be a top provider for the government in the areas of managing large amounts of data for the US government and also deploying some agentic AI for the government. As of recently, that's been their focus. So we'll be watching them. Their financials also look pretty good. So then we've seen them get into some $10 million in revenue per quarter and all-time highs of $14 million in revenue in the last quarter, with the balance sheet increasing and their debt lowering. So very kind of aligned with the brick by brick analogy we had at the beginning of the video. Maybe not looking for a ton of trades, a ton of crazy, one big hits. But when it comes to CTM, they've just really steadily kind of built their market cap, and we like to see them at that. Looks like they're jumping a little bit up to $1.10 pre-market. We see them up there trying to make that run back up to $1.50, which would be about a 45% increase for them, which is why we have them on the radar. I mean, that's quite the increase if they're able to make that move. So yeah, again, just watching. It looks like institutional attracting value, meaning they are doing things that are bringing them in a lot more money than what their current valuation is at. Which, if institutions are catching on to that, most likely we would see them get up into 150 to $200 million market cap, which is why I hold them, and so we're seeing them get back up in there right now, and hopefully that's helpful for you guys. Biggie, thanks for tuning in. David, what's going on? I want to say it's Sunday, but it's Monday here. Feels like a Sunday. And Biggie says SoundHound, SOUN. And MD Akramal is here. Shanto, thanks for tuning in. Hi. What's going on, bro? Okay, let's take a look at Sound. So this is ticker symbol SOUN. This isn't in defense tech. They're actually going to be over in the AI and LLM large learning models. They're up about 1.5% ahead of market open tomorrow. Looks like we're looking for a move for CTM to get back up into this $15.50 range. I sigh because they've been on this really consistent uptrend for the last few months, and we've been looking for this recovery to take place. And it looks like potentially they're making that move right now. So why is Sound on the list, and why would we cover it? Well, first of all, Biggie, thanks for bringing it to our attention. People ask, why do we cover this stock and that stock? A lot of time it's because great investors like you guys in the chats are commenting the ticker symbols and bringing them to my attention. Some people think I have this this ability to just pull these ticker symbols out of nowhere. But you guys have some good investor insights, amazing investor insights, and that's why we're here. So when it comes to SoundHound for Biggie on this analysis, and we got a few other people, I think, commenting SoundHound, what we're following for Sound is that they have recently been ramping up some of their technology. They have AI agents, okay, and they use voice. So SoundHound, they use voice AI. SoundHound was in voice first AI agents before AI agents were in. SoundHound AI agents are the accumulation of 4 decades of expert engineering and innovation. And they end up in this AI boom we're in, working with Hyundai and Kia and Chipotle. They're partnered with NVIDIA, which means they are providing voice AI. So you could see White Castle is using them at the drive-thru. Some of you guys, at least myself, I've seen that they have these AI voice programs at restaurants. One of the things that happens now is that you go to the restaurants, and when you go to order, it's maybe distinguishable from a human, but you get this voice of an AI that says, what can I get you today? And you order what you're ordering, and then they take your order just as a human would. And while they're doing that, the people that work at the restaurant are already working on your order. So it kind of saves time. I don't know if you've ever seen somebody struggling, trying to take an order while they're preparing food, and they're like, yeah, what can I get you? And they're, it's pretty crazy. I used to have a friend when I was in high school that worked at a place called Jim Boys in California. And he always told me about how he was trying to take orders and do a bunch because there was not enough people staffed at the restaurant. And when I think of SoundHound, that friend went on to work at Tesla, and now he works in building out these really cool vans for traveling. They're high-end Mercedes Sprinter vans. And so he always was going, but he always said, man, I don't understand why they don't have people just enter their order and it shows up, rather than us having to talk to them, because we could probably get it more accurate. It would be faster. And it's kind of true here with the AI. You see AI at the drive-through as a result of SoundHound. An interesting contrast from SoundHound restructuring is kind of how it looked with BigBear.AI. So if we go to SoundHound to their financials, they've really had better financials the last quarter. Not tremendous, but revenue of 42 million, net income negative 74. They had a positive net income the quarter before with some money coming in. But back in December, they had a similar quarter to Big Bear. It looked really negative on the net income. They were still building their capital, but by now they've grown their capital to 579 million, and they've even dropped their liabilities down to 200 million. So their financials look pretty okay. The valuation's a little high, 5.05 billion is a little bit high for their current revenue, but I think it's buying what could be, and the value creation that they're having here potentially could serve as a really nice revenue boost in the next coming quarters, which is what people are looking forward to. And we're already kind of seeing that, actually, seeing the revenues increasing by nearly double every quarter. So they are growing. It's been volatile, but they are growing. So SoundHound's there. What did the levels look like for Sound? Again, we're watching the level here. They just broke above this moving average, and they're trying to hold above this EMA. This indicates that they are on a run now to these highs. They're trying to jump back up into that $15 range, which would be somewhere between a 10 to 15% margin for profit. So 10% up to $14.50 to 15% up to that $15 price point. So the potential is definitely there. One thing to note, though, the RSI and the MACD are indicating that's overbought at the moment. When it makes runs, though, upward, it doesn't really slow down. Sometimes it looks overbought the entire time while it's making its run up into highs. So it doesn't necessarily mean just because the RSI is showing that it's overbought, or the MACD is showing overbought right now, that it is a sell. The reason why, I think, is overall trend looks good, but there's also going to be levels that institutions would consider previous resistance levels and support. So you got a previous resistance right where they're at, about $13 a share. There was a resistance back in June and July, and then back in August 11th, there was a support there, acted as a resistance in or late August, and then now September 1st, they're just kind of breaking above it. So they're trying to use that previous resistance as a support level to bounce and maybe make that way back up into that $15 price point. So if we were getting into a short-term trade with Sound, which we do have a chunk of it for long-term, but we don't really add or change that position much. We just kind of got in a couple of months ago, and we've been holding. But I do think that if they're going to hold this level around this $13 price point and maybe start to make this run or continue this run up to $15, there could be a potential trade if we see the everything line up at market open, or see the market of AI continue to get some momentum here into the next week. That's how that looks. All right, so we got Desai is here. What's going on, Desai? Got Carmen is here. The username I need money 777. I appreciate you tuning in. Thanks so much for tuning in. Can I make a snap judgment around the username? I think it could be a little bit aligned with your ticker symbol you provided. I've seen a lot of hype, or I guess gambling. I don't know if that's I need money 777. That almost sounds a little more like gambling. I don't know if that's the case, or what your intentions there. But you should change your you should change your username to I have money. Maybe you'll have more of it rather than focus on needing it. I found that when you focus on needing it, it even it eludes you even more than if you focus on just having it. I don't know if that's helpful, but you could always change your username. There was this funny guy years ago, and we'll jump into open. And I was on YouTube, and his name was something like it was something along the lines of always missing money, or something like that. And I told him you should change your name to. I mean, what's the difference between having a username of always missing money and always having money? And he ended up changing his name from like always missing money to always having money. And he sent me a message. He sent me a personal message and said that it actually changed his psyche. He felt it was easier to make money because he wasn't feeling like it's like, oh, I'm someone that's always missing money. He was thinking like, I'm always having money. So he actually found it easier to make money after that. It just changed his whole mindset. So whenever I see a username that seems like in a lack space, I'll tell him, I'm like, just change your username from I need money to I have money. Oh man. So open stock, I've noticed. I'm gonna approach it carefully because I've seen a lot of hype around the stock. A little bit of a manipulation as of recently. Looks like it's had some spikes into July. That was, yeah, pretty large spike and then sell down, and then we see them start to continue this uptrend. It almost appears that they're trying to find a support level up in this level around $4.50, and that this is kind of the trend that we're looking at, and that they could make that run back up into $6. And I think that the financials weren't so bad. It was actually pretty good. Let's take a look. Market cap was $3 billion. They have 1,400 employees, and I believe, if I'm not mistaken, they focus on wholesaling homes. Is that correct? Yeah, so we got a cash offer for your home. It's possible they could be the people that are putting up the signs in your local neighborhood that says we buy houses. I worked for a gentleman years ago for a real estate company that specialized in sending out mail to people to get them to offer to sell, see if they want to sell their house. And he was a big advocate that those "We Buy Houses" signs were really effective, and he gave me some stories of how he built his entire business off "We Buy Houses." So Opendoor is essentially saying "We buy houses," but they're doing marketing, and they're saying we'll give you a cash offer for your home, and they're just taking the whole individual real estate business that people do to find off-market deals and taking that to the market. Their revenues at 1.5 billion per quarter with a negative net income, so indicating that they aren't making more than they're spending. But their balance sheet here, you can see total assets 2.9 billion, with their total liabilities at 2.2 billion. So what does that mean? Well, from an outside looking in, it's possible they could be in a good spot. They have seen declining total assets over the last year. You can see that 3.3, then 3.4, and their liabilities have gone down just a little bit, but their assets have gone down more. And so when we look at the difference between total assets and liabilities, they don't have much wiggle room. They got about 700 million or 600 million in assets, and they are still negative net income, which is interesting because they're making so much, about 1.5 billion. So that kind of puts their valuation really of a market cap perspective probably lower than where they're currently at, that they might be trading at a premium. I know that sounds crazy because you look at the revenue, you say, wow, look at all the revenue, but they're still not bringing in a positive net income, and their liabilities are fairly higher than what we normally look for. Like you could look at SoundHound. You see, before we open SoundHound, this is Open. Open has this orange pretty high up to the blue, indicating their liabilities are pretty high. When you open up another, it's pretty standard for real estate companies, though. It's not that crazy. But when you open up SoundHound, you could see how there's a much wider margin between their total assets and their liabilities. That's usually a pretty good indication that there's a more healthy and balanced balance sheet. So not something that I personally would invest in because of the manipulation we've seen. We've seen some really large spikes, and before then it was just selling off, and it just kind of spiked up. But if you're looking to trade it, let's say on a medium term trade, most likely you would be looking for a stop loss somewhere around $4 to $4.20. Because do you see how the risk is a little bit lower according to the trend? maybe 3 to 5% risk here. And then the upside, if it's going to continue the trend, you'd be looking for something like this, about a 35% increase up into that $6 range. So while the liabilities were just a tad bit high, not higher than assets, I do know they've had some hype, and that's why I personally don't trade them. But I do see the trend you're looking at, and it does make sense. And the margins for profit seem to line up fairly accurately. So hopefully that's helpful. That gives you a better idea. Personally, I just don't trade them because, last time they did this, it looked like that was the pattern, and then they had big institutions just boom sell off pretty quickly, and they've kind of had that. When I've seen big manipulation on stocks, sometimes I'm just a little more hesitant to. Well, it's not a company I'd buy for 5 years or 10 years. It's so that's why we wouldn't invest in it on the short term, because we only trade companies on the short term that we would like to also hold for the long term. And some people don't like that. They say, "Will, why not make a quick buck over on this stock?" I get it that it's exciting and everybody's talking about it and everybody wants to hear about the or be a part of it. But I do think there's value in focusing on companies that for the short term, that if you ended up holding them longer, then that would be okay because you would invest in them long term. It's kind of what we're talking about, how you just want to build a good base for yourself. Carmen says Open's going to $8 this week. Carmen, I appreciate it. Let me know. Why do you think that, Carmen? Is it just a valuation? Is it the hype that you're seeing online? What's leading you to believe that? Not that I don't think it's a bad opinion or anything. I'm just curious what makes you say that. Is it the that they're doing a large scale wholesale operation and that they're using tech on their side? Is it I'm curious, what is it that makes you say that? David says, "Well, what is up with Kevin? How well did he do? What's the company he was with after Homeland Security? Just trying to see if we could research any deals that he put together from." Oh, I think you meant to say Will, but you said well, I think. Will, what is up with Kevin? How well did he do? Yeah, so BBAI from that perspective with Kevin, Kevin McElhaney, is that who you're referring to? It seems like he's the right person for their company and what they're focusing on. He was previously in Department of Homeland Security, and when they are doing things like border patrol and working with the airports, it makes sense. The issue that I found was the openness of investor feedback. I tell you guys all the time, like, the best investments that we find are not always the investments that I find. They're the investments that you find and you bring to the table here, and you share them in the channel, or you share them inside of Stockmates, whatever it is, where the channel comes through. Maybe you shoot me an email, you send me a message on Instagram. Some of the best insights come from you. And I don't take that lightly at all. That's why I ask you guys all the time, what are you looking at? Why are you looking at it? What's the reason for it? Because that actually contributes, like, what do they say? Like, 3 minds is better than 2. If we're just going back and forth, it's not going to be that valuable. You got to hear from another perspective, bounce ideas, and that's where the progress comes. And with BigBear.AI, for example, in their investor, there was no investor Q&A in their earnings call when they reported earnings. Most companies say, "All right, we're opening up the conversation here. Investors, what do you got?" And they have a shoot around of ideas, and they might even say, "Hey, what are you looking at in this market?" And then the CEO says, "I never thought about that. That's a good one." But when you don't do Q&As, which they didn't do in the earnings, that kind of puts you in a one-way communication, which they miss opportunities there. And so I think if there was one advice I'd have for this is actually almost contrary to my own belief, but so I got to be careful. But there is a fine line between taking investor feedback and hearing Q&As and hearing from people about your idea or about what you could do better, like Big Bear, for example, and you're in a startup phase almost where you're starting to try and grow aggressively, and you have to be almost dictatorial of like, this is what we have to do and this is how we have to do it, and we're doing this, and I know we could do a million other things and I appreciate all the ideas, but like we got to do this, this, and this, and that's what I know we got to do to continue to grow. Like there's definitely that aspect too, which is kind of the contrary to people saying they didn't do a Q&A at the end of earnings to say, hey, well, they're almost in this phase where it's like they know what they're doing. They got to execute. It could have been as simple as he was trying to do this, this, and that, and he said, we got an earnings call. Okay, can I just pre-record it? All right, pre-record it. All right, we're done. All right, so what are we doing with this deal? Do you understand? It's like it could have been, um, it could have really come down to a time management thing. So I wouldn't read into it too much or look at it as like a red flag. But it is something that I believe would be helpful and might be worth time for them to do in the future. But I do, yeah, I mean, the dictatorial approach definitely is something you have to do sometimes in the startup phase or when you're really building things off the ground. So a question from Mr. Honest. He says, I think BBAI has a great vision, yet my question is, it seems like the CEO is counting on the big beautiful bill for contracts. Yet what if they don't get any contracts? Yeah. I mean, when you play golf, if you play golf, maybe you won't understand if you don't play golf, but I'll kind of tell you, I'm way less accurate with my driver. So when I pick up my driver, I'm taking a risk. But I got to decide, if I'm going to have a good hole or if I'm going to put myself ahead to potentially get a birdie or a par, I pick up my driver, even though it's not as accurate. If I hit it right, I'm going to hit it far and it's going to be worth it. And it's a risk you got to take. So, it's like us going, and you got to take risks in business. I'm going to a quantum computing conference. I've had to do that. I've wanted to do that. We've gone to quantum computing conferences quite often, and we're going to one this week. And some people tell me all the time, Will, quantum's going to zero. It's not going. And I'm sitting here saying, well, I see this infrastructure. I see IBM. I see Microsoft. Why is Google looking at this? Because I think they're taking a risk, and to get that information, while it might be, maybe it's a waste of time to go for a week, it's something that I'm betting on. You kind of bet on it. And so I think the same thing's true there with that CEO counting on that big beautiful bill for contracts. Without hope, you got nothing, right? So you got to count on something. You gotta look for catalysts. They do have the World Cup coming up, and they do have the Olympics coming to the U.S. So I would imagine that they're thinking that the government's going to stay true to the big beautiful bill and really want to dial in the transportation and the biometrics and the things with the TSA, which they're probably going to come through with. So that would make sense. Hopefully that's helpful. Shamley says the blog. D Nuts says Shamley. I'm not familiar with this one, but it sounds like, all right, it's Krispy Kreme. It sounds like that meme where they say like D's nuts. So I thought I got trolled for a second, but all right. D Nuts. I think soybean oil could power a vehicle. I think they did they did something on that where it could power a vehicle, and it's basically like full of carcinogens, and it's super unhealthy. And most people see large inflammatory response in their body when they have soybean oil, whether they like it or not. And like over 80% of people are allergic to it, and they don't even realize it. And that's why they get tired whenever they eat food. And Dunkin' Donuts just soaks their donuts and deep fries them in that good old soybean oil. So I'm not going to cover it. Yeah, sorry, man. There are choices we make on the channel, whether or not we want to cover things. Can I take one of these moments where I don't cover it? Is that okay? Appreciate you, man. I do enjoy a donut every once in a while. They can be tension relieving, but you get it. All right, Archer. Angel says Archer. Is Archer a buy? The entry price. Let's take a look at it, Angel. And Shamil, thanks for tuning in. I appreciate the ticker and everything. Just, sometimes we just hold to the values. If we don't like the real world value, we don't want to cover it. ACHR, this is Archer Aviation. We can also go over to our aviation watch list. Aviation tech. Let's see what's going on with Archer. Looks like we're watching an overall uptrend. They were starting to build this trend. And we're looking for what could be a potential bounce. Wow, they've had some big shoot ups. It's almost facing pretty heavy downward pressure. And you can see it's holding below that EMA. It's trying to drop below, down to that support level. It's at the 200-day moving average. If I'm not mistaken, they're trying to do something related to, or they are signing a deal related to the Olympics, where they're going to have they partnered with LA28 Olympic Committee to serve as an official air taxi provider for the 2028 Los Angeles Olympic and Paralympic Games. This is one of those classic examples where, we're, again, just like with Big Bear, tying a mega event to what will be the economic impact will be big. And they're looking to get momentum from that event for their aviation company. So this is the problem with Archer Aviation. If I'm not mistaken, let's see, $5.7 billion valuation. They haven't turned a profit yet. They are negative net income of about $100 to $200 million a quarter. So again, like twice as much of the valuation as Big Bear, and they've lost like 3 times as much on the annual basis. And you see increasingly negative net income with no revenues yet. You see that orange? That's just negative net income. And so if you look at the balance sheet, they did get more investor buy-in. They're at $2 billion with assets. So realistically, a fair valuation for them would be probably around that $2 billion market cap, which in that case, they would probably sell down to somewhere in this like $4 range, back down into this area. And we could see them sell as low as $5 to $4. And I wouldn't really put that past, they could carry the momentum, but can they carry the momentum all the way to 2028? It's going to take quite a bit. Some of the things we've seen from the articles that are released about Archer and Joby and things is they're ramping up their midnight aircraft for the Olympics. That's what it's called, the midnight aircraft Archer. And the long-term growth potential definitely remains strong. But both the companies are taking on a whole nother market. And so it's going to be challenging for them. And they're in startup phase. So if you're looking at Archer, I wouldn't look at them for a short-term trade right now or anything like that. I think they're probably poised for a lot of volatility in the near term. It's possible you see a bounce, something like that. But more manipulation than steady growth right now for them. And I think probably this is the real line that we're going to see build out for Archer. You got this $1.62, and you can see this level of support, and it looks something like this. I think their trajectory is going to be more like this, not straight up, but we could see them slowly build up to this point where they're at now, consistently hold it about a year or two from now. And so where they're looking right now is probably down into this level, around $4 somewhere in here would be more conservative. It's ultra conservative, I get it, but that's just how I would approach it. So wouldn't make any buys or sells currently on Archer Aviation. So hopefully that's helpful. Yeah, entry price, if you're looking at a buy, I would personally wouldn't. If you were maybe for a short-term trade for the bounce on the 200-day moving average, you could look for that quick volatility, but it would be something you got to watch closely, that quick bounce of maybe 10-20% in that level. But I don't think that's likely. I think what might be more likely is kind of that making its way back down to that $4 or $5 range. And so entry level, it doesn't matter on the long term, or maybe you want to wait and then get in when it sells down some more. On the short term, also doesn't really matter. It's kind of like, doesn't matter if you make a ton of trades. What matters is like the quality. So if you make a trade here, I would want to have like a really clear plan together for the margin for profit, probably at 10 to 15, 20%, and then have a stop set up so that you're, in a position where you can easily lose and not regret the trade, and still lose a couple. And as long as you win, you're going to be up. You could even lose more than you win. So that's probably how we'd approach Archer. All right. Biggie, I appreciate you. Thanks for tuning in. Redwire, I think we could cover it in a little bit, Biggie. But since we already did one ticker for you, I'm just going to continue down the list just a tad here. So we got Bug is here. Bug, it's morning where he's at. Thanks for tuning in, Bug. Appreciate you. And Bug says ONDAS. So Ondas. Let's take a look. ONDAS. Ondas. All right. All right. So Ondas, last we were looking for Ondas was actually, I guess we were looking for a 120% increase from this support. It's been a while, and it looks like it made that move. It actually bounced up into that $4 range and continued higher. It's up to that $6 price point. So it's trying to make what is a very parabolic move. For it to continue up at this point would be very hyper bullish. You could see the RSI and the MACD now looking overbought. So we'd have to look at some of the reasons why. When you look down on the shorter term levels, it has this trend going for it. I think what we could see is extended growth. Let's kind of take a look at the financials and see why it's growing the way it's growing. ONDS stock. Ondas Holdings. And let me just... autonomous drone and wireless technology. I've seen this company. Okay. So they're doing delivery, and they're even secured a $14 million order from leading defense customer for Optimus drone systems. Got it. Okay. So $1.45 billion market cap. Their net income has been negative, but they're increasing their revenue, almost doubling every quarter. Not a lot though, still around $1 to $6 billion or $6 million in growth. So the financials right here, they look okay. We see the revenue up, but net income is still down. Balance sheet looks okay as well. Again, they got a market cap nearing that of Big Bears, for example. They're up almost to $2 billion, but they only have about $150 million in total assets. So at this moment, they've actually surged pretty high above where their fair value would be. So most likely they got a larger chance of correcting unless they are getting purchased just due to what could be, which does happen. But when we look at their current, RSI MACD, we're just kind of taking a look. It looked pretty overbought at the current price levels. At the very least, I would look for a sell down back into this price point of about $5 a share. That's a 12% sell down. That would put them back around 1.3 billion, which is still a little high. Really, where they would probably find the most consistency in holding their levels of their price would be around $3 a share. A little bit more bearish. I wish I could say, hey, we're bullish, this is gonna go to the moon. But actually, I don't wish I could say that. I don't ever say that. But I do think that it's overbought at the moment. I think it would have a greater chance of going down than it does continuing up, even though it's made this run over the last few days. Of course, it could have that volatility spike and continue, but at that point, it becomes unhealthy for the stock. There comes a point when a stock pumps so much that people don't trust it. And so they're kind of nearing that. What they actually like to see, what would be healthy for them, would to be a sell down back into this $4.50 range would be more conservative and healthy to see them kind of get back into a slower and steady growth. For a smaller company, I know it sounds contrary to what you'd want to hear, but a lot of times the slower growth can be more beneficial for them to build market cap and be more successful than just explosive growth. That's why we don't really focus on the YouTube channel around we have to grow to 100,000 subscribers. We're on the road to 100,000. We're getting there, and I appreciate you all. I'm super excited about it. But I'm also not we have to get there, because I also want to make sure content's good, that we have everything delivered for everybody in a way that's on point with integrity and everything else as we can, because then, basically things amplify. If they were to get up to, $7 a share and they're still at that valuation, now they seriously have to increase their revenue. And if they don't, then they're going to drop really hard. So it'd be better if they kind of sizzled out a little bit, if that makes sense. Yeah. So that's ONDS. Francisco Diaz says, love your BBAI content. Thanks, Francisco. Thanks for tuning in. Robin says, Estiana says, hi. What's going on? And Francisco, yeah, I mean, the BBAI content is something that I found people are looking for those consistent updates on certain companies, whether it's quantum or data center companies. I'd like to go over APLD too. I have that in the title. So while we have some from you guys, it would be great if we can drop into APLD. There is one from AK Volt saying, what's the outlook on long term on APLD? So we're going to jump in real quick, and I'll go back up there and see what we got. What is that comment from Bug? Yeah, I can get 18,000 cups of water, please. What is that? You guys are reminding me, there's another comment there that says the guy that says the username I need money is from the movie How High. I don't know if I'm like in the right frame of what you guys are looking at, but there used to be this movie that was just one of the dumbest movies ever. And it was called, I think it's called Dude, Where's My Car or something like that. And they're at like the they could do this with AI nowadays where they're at like the drive-through and the person's like yeah, I'll get I don't know what he says, some chicken wings. And then he's like, and he's like, I'll get like, a Sprite or something. It's like, and he's like, that's it, that's all I need. And then he's like, no, I don't need anything else. And then he's like, no, seriously, I don't need anything. And then like the whole thing like blows up. I don't know. I don't know why, but that 18,000 water cups thing reminds me of that. It's hilarious. I like the way you think you need to be out of the lack mentality. Yeah, I mean, it'll help you. Well, let's see if he changes the username, comes back here. All right, APLD. Let's jump into it. So that's going to be over in our data center stocks. When it comes to AI, one of the moves that a lot of people miss in most industries is looking just one step further than the actual tech. So, for example, like one step further than ChatGPT is looking at what's powering ChatGPT, and that's going to be data centers. One step further than data centers is going to be looking at like who's building the data centers, who's actually making it possible for those data centers to get built. And the company that is building data centers, one of the companies, is called APLD, and we can take a look at them here. They've been on this consistent uptrend. They've been making some breakout moves out into this $12 breakout above to $14 and $15 now. And they're in this trend currently. You can kind of see how it looks. They got this trend where they're making this move up. It looks almost like they're overextended, but they're signing some really large deals, which is kind of why we're watching them here. And so in this trend they're in, where they're uptrending and now nearing this rising support. So you see this rising support level. You got higher lows and higher highs. So you kind of indicate, you can see the support and resistance, but kind of on an uptrend. And they're at the support here. Can we see a correction? It's possible. One thing that happens is you get previous resistance acting as support. So you got previous resistance back in July acting as a support here. Then you got previous resistance, basically, August, and it's acting as a support here. Kind of see those levels. And now they got previous resistance here, kind of acting as a support now, and it's trying to stair step its way back up into that $17.50 to $18 range. Which from here would be a margin for profit of about 15 to 20%. So we're looking, kind of for this move to play out. Why are we watching APLD? Well, APLD stock has these really interesting approaches to building their data centers. They say the epicenter of AI is built here, designed from inception to accommodate the unique needs of AI factory deployments. So again, like GPUs and data centers power ChatGPT, they power Grok, they power all these things that we're using as AI. And they're going directly to the point of generation. So the workloads are powering sometimes the grid, but they're going with wind turbines along with solar and hydroelectric and things like that. So water. And they're building their data centers in very cold places. They recently partnered with CoreWeave. If we look at their press releases, it started out here as a 15-year, $7 billion deal, recently doubled up into, or not doubled up, but increased into $11 billion deal. Now you see 11 billion increasing with CoreWeave, so building their data center in North Dakota. The reason they chose North Dakota is because it's really cold and it makes sense for them to keep it optimized. When it comes to other deals, they pulled in a $3 billion Polaris Forge 2 campus in September 2025, expanding North Dakota's role as a national AI infrastructure leader. And again, in that cold area, it's perfect for what they're trying to accomplish. And a lot of big tech companies were incentivized and took up that incentivization from the administration towards the beginning of this year to expand the construction of their factories, of their manufacturing, of their data centers into the US. So you got Apple and NVIDIA and even Taiwan Semiconductor, along with most semiconductor companies looking to streamline their processes and all of their factories into the US as they were incentivized to do so. So Applied Digital is partnered with Supermicro Computer, a company that also helps construct the data centers, the housing for the GPUs, NVIDIA, Dell Technologies, Intel, Hewlett Packard, and a few others are also on the partnership list. So as we see them build their revenue out, they got some market cap that's at 4.2 billion. And since these deals have been signed so recently, we haven't seen any of it really reflect on their balance sheet from a revenue standpoint. Right now, the revenue is still showing around 38 million to 50 million a quarter, which is increasing annually, but still not showing signs of reflecting those deals that they signed. So what could happen is, depending on how those deals are paid out or when it hits their bank account or what have you, potentially they'll see a lot more growth. And that's really what's happening. That's why their market cap's at 4.2 billion, despite revenue, being kind of similar to how BigBear is, right there around 38 million. And then the balance sheet there, 1.8 billion in assets, and their liabilities are at 1.24. So they're seeing pretty good assets, which is pretty reflective of their market cap. So what does that mean? That means that the guy who mentored Warren Buffett, you guys have heard of Warren Buffett, he used to say, you want to look for a company that the total assets are less than, or the total assets are greater, than the market cap. And so their total assets are not greater than their market cap. They're about close to 2 billion. But they're also building something that could be a massive impact in the AI boom that we're in right now. And so that's why we're looking at them here from a chart perspective, watching the support here around $15, see if they hold that $15.50 price point, and maybe can make that run back up into that $18 resistance. So Jeff, thanks for tuning in. Plant Labs, we could take a look there. Philemon says, I like the way, oh, I already read that. Let's see. James says, PLG, definitely manipulated, trying to find out how we did with the other company before there. Saver says, what about Rich Tech Robotics? It's been a while since we've covered Rich Tech because their financials weren't lining up yet. Let's see. David says, well, he left on good terms. Response, so no derogatory nickname. Let's see. Sent too soon. Scott says USAR has been a good stock for me to trade. Chart looks good. Place to get in. Thoughts? All right, Scott, let's take a look. USAR. Rare Earth. Is this like the rare earth company that does soil? Or is this a company that does mining? Let's see. Leading supplier of critical rare earth magnets. We're rapidly building one of the largest rare earth magnet manufacturing facilities in the United States, targeting a diverse set of industries and capabilities. Nicely written. Our vision is to be a leading Western supplier of high-value rare earth magnets. I really like the idea of magnets. Magnets, to me, are free energy. I've always thought that energy solutions in the world will be solved by magnets. So I'm always fascinated by magnets. But let's take a look at their stock. So it's USAR. We'll take a look at financials before I really dive in, actually, to the chart here. Let's take a look. Let's see. $1.48 billion market cap. Negative net income. They haven't had any revenue, apparently. Balance sheets. Oh, I'm sorry, man. It's so cool, but they have way more liabilities than they do assets. So I just can't touch them. Essentially, imagine you owe the bank a lot more money than you have. And then you try and go get a loan or, ask someone to invest in you. They're going to be very hesitant because you already owe people money. That's how I see this company. They owe $286 million in liabilities. They got about $179 million in assets. So that means if at any moment they have to pay back those liabilities, they won't be able to, and they would end up declaring bankruptcy. So for that reason, I won't be investing in the company. See how the chart looks. Yeah, pretty low volume with some manipulation, kind of stair-stepping around you. Yep. Sorry, I wish I could give you a better answer because I actually really like magnets. I'd like to cover more magnet companies. But yeah, hey, that's how it looks from my perspective there on that stock USAR. Koz Mojo says, you've mentioned some stocks that I knew nothing about. I look forward to researching them more. Thank you. Hey, I appreciate it. I'm glad that you find that. And I didn't mention them. A lot of it was the people here in the chat, so appreciate you. Angel says, thank you for the Archer analysis. Yeah, of course. No problem at all. And Y says, can you do Rocket Lab? Yeah, we could do Rocket Lab. Let's take a look at Rocket Lab. So we're going to go over to the... we got one more. Room for one more after this. I'd like to do more. Guys, I'd love to do more, but I got a flight tomorrow, so we're going to be getting ready for that. Let's see. AI and LLM. No, it's going to be under space tech for Rocket Lab. Now, when I was growing up, I had this friend. His name is Ben. And when I was younger, we used to always say, how can we build a rocket company and we could go and mine asteroids and become the world's first trillionaires. We'll go find gold and we'll find all the rare earth metals, and nobody's going to be able to do anything because we'll have our own rocket ship. My friend, I actually lived with him. He went to UCSB here, and he actually is in this LA area because he works for Rocket Lab. And I'm very familiar with the company because I actually got introduced to it, started investing in it around $3 a share. I was really blessed to have found it early. What we know about Rocket Lab is they specifically are focusing on building end-to-end space solutions, which means they don't rely on other companies for things. In fact, Rocket Lab builds their rockets and the materials. They also build the solar cells that go into the rockets, and they use carbon composite materials. They have this Electron, which has been launching rockets for space companies like Black Sky, for example, who does the AI space tech. here. And what we've seen with Rocket Lab is they're becoming the, if you're looking at Black Sky, for example, you're looking at AI analytics, you're looking at Planet Labs, maybe. You're looking at, what's another company? I mean, we could probably find them here. Um, Starlink launches with SpaceX, but if you find a lot of satellite companies are using Rocket Lab, so you go one step further to investing in them and you say, what company is helping them launch? And you'll find that when it comes to Rocket Lab, they've been launching for Black Sky, for Kinesis, for Synspective. So they're doing, satellites. They're launching for NASA. And they told NASA, hey, we could do that Mars mission in 5 years and do it for billions of dollars less. How about you choose us? And they got a lot of NASA market share there. They're launching for Leidos. So Leidos has market share up for the Golden Dome. They're launching for, they've done Black Sky a lot along with Rideshare. And so Astro Digital, we've seen them launch there. So the reason that we like Rocket Lab is they're actually one of the only space companies that is becoming the ferry for companies to enter the space tech. And you just look at their revenues increasing year over year. Their revenue is now up to, it was 400 million in 2024. In 2025, they're on track to bring in almost $600 million. And their net income's still negative, which is expected in most space companies, but it's increasing. And their balance sheet looks good, about 1.5 billion in assets. They have a lot of are pretty low assets for how much they have in liabilities, and just honestly pretty low assets for where their market cap's at. They're at 22 billion, but you're really buying a company that could be one of the top companies in the next 10, 20, or 50 years as they're building that infrastructure. The other thing that they do is, because they use the carbon composite for their rockets, they actually end up saving a lot of money. People say, well, isn't carbon more expensive than steel? It is, but then they spend way less money on fuel. They spend less money on other materials, and their rockets end up saving them money because they're lighter than, for example, using steel, and they can focus on getting a better payload and more efficiency when they're carbon as opposed to steel, when they're that carbon composite. So I think there's a lot of things they're doing that are awesome. Institutional holdings, obviously we see increased positions. BlackRock's invested. JP Morgan's a big investor there, along with Vanguard. And where they're at now on the chart, right up here around this resistance level, we're actually watching them try and make a run back up into all-time highs. I like Rocket Lab long term. There's not really a good place to buy them for the long term. In the near term, you could say they're still on a cliff here. They're kind of at an all-time high near, and maybe we see a sell down somewhere in here. But I would urge caution on the short term, just because they're at that high. Maybe we see them sell down at 5% or even down to this level if they can't hold. But their next support is at $45, so that $48 a share. Next support is at $45, and they're looking to make this run back up into this $53 level. So nearest support at 45.50, so 4% sell down if they make it there. And then nearest resistance for all-time highs is about 12%. So they do offer slightly more margin for profit if you're keeping in mind those levels than they do risk. And I really like the company personally. I was just talking with my friend Ben that works at Rocket Lab the other day. He was saying, yeah. I said, hey, what's your favorite stock nowadays? Is it still Rocket Lab? He said, dude, I'm in Rocket Lab. And of course, he works there, so he might be biased. But hey, that's how it looks. Jose Alvarado, thanks for tuning in. He says, hi, will APLD $20? It's quite possible. The thing that hasn't caught up since they signed all those recent deals, though, is they haven't reported their earnings with what kind of revenue that's coming as a result of those deals. There's some really good comments here, and I appreciate you all. Thanks so much for tuning in. Super Microcomputer Madi says, we got a little bit of time. I'm gonna jump in really quick with Redwire. Or we'll get to Redwire. I'll do the super microcomputer and then we'll cover Redwire real quick. One sec. Whoa. All right. Looks like we're kind of bullish there on Redwire last time. Does that sound about right? So we saw a pretty big sell down on not Redwire, super microcomputer. We were watching them here. They sold down here into this level of about $40 a share, and nearest resistance level is up around 65. Now, super microcomputer, this is something that led to us being able to. I'm just going to tell you when AMD was selling off and everybody was saying it's not good. Stay away from the advanced money destroyer. That's literally what they were calling it at one point. AMD stock. And when that was happening, it was down here, beat down around $7 a share. Nobody wanted to talk about AMD. But I'll tell you what we did is we were investing in it heavily, and part of the reason why is because of their providing to Starlink. And if you go and you search Starlink, you could see AMD stocks, my number one holding. These are our videos. And guys, thanks so much for all the support on this road to 100K subs, because to see us here on Google when we search is really cool. And so when we look at why we invest in AMD is because they were powering a much greater movement than what people realized, which was Starlink. And they really have recovered big. They're up to trying to make runs to all-time highs. And so when we look at this company's super microcomputer, people say, okay, they're partnered with NVIDIA. We know that. They're partnered with APLD, for example, which APLD is building data centers, and super microcomputer builds the cooling systems that hold all of the computing inside of those data centers. But what they don't realize about super microcomputer, all right, you can go to the site, you can see their tech, and they say, oh, okay, it's cool, but it's not the same. They're not actually selling GPUs. What they don't realize, did you know that super microcomputer is doing all of the housing systems in the liquid cooled supercluster for xAI? That's right, they're partnered with Elon. Did you know they're building inside of the data centers for Grok? So that's something people don't really realize. And they write super microcomputer off. They say, yeah, it's not like GPUs. They have these cooling systems. Like, that's not where the money's at. But almost every company that we found NVIDIA in 2019 because we said, what microchips are powering Tesla? That's literally our question. And Apple. And it was NVIDIA. So it just made sense. When you're right in front of you looking at xAI as becoming one of the top AI companies in the world from Elon's company, and you have super microcomputer say, yeah, we're building the AI supercluster right in front of us. That's one of those moves. When we've seen super microcomputer be up around $120 a share, and we know it can make it there, that's a 200% increase from here. I mean, I'm personally in it. I'm in it. So in the conviction there, I don't want you to say, well, Will's in it, I'm going to buy it. That's not what I'm saying. I'm saying there are quality stocks that oftentimes get beat down. And I think super microcomputer is one of those companies. And so they've had this consistent uptrend that they've been building since November 2024. It's had extreme volatility by about 20 to 50% for sure. But right now they're selling down. They're holding below the EMA, not confirming the uptrend, but trying to find a bottom there around $41. If they could bounce here around this $40, $41 range, that would be great for their continued direction of trying to get back up into that $64 to $80 range, which would be a 50 to 100% increase on super micro. So that's why we're going to watch it. All right. So Andrew says, Will, thanks for sorting out Stockmate access for me. See you on the other side. Safe flights. Appreciate it, Andrew. Yeah, I'll see you tomorrow morning. We will be there at Market Open. And guys, today's the last day. It's September 1st, as we've been talking about for a while. So Stockmate is closing lifetime access. So if you guys want to grab lifetime access to our daily live trading sessions that happen Monday through Friday, and get a free t-shirt. So Andrew, get ready for that free t-shirt. I don't know if you got if you got that yet, but you know, we are moving to a subscription there. So if you want to get lifetime access, that link is there below. I think the subscription is going to be super value backed. It's going to be really good for you, and if you're looking at something that you can kind of digest and join as a subscription, the subscription option is awesome, and it's going to be an upgrade. It really is. But when it comes to just, I guess, human behavior and how people like to do things, some people don't want to pay a subscription, and if that's you, by all means, feel free to check out lifetime access for StockMate, because you get the daily live sessions, they're recurring, and you can get access in the second link below, and it's there for you. Now, if you want to get the machine included, which is our AI tool that we use for our streamlining our analysis, so there's a stock here. I'll type in Redwire. This uses the best AI companies in the world. It's using OpenAI and Grok, and it's doing all the analysis for me. It's skimming the press releases and the verifiable sources. It's analyzing the charts. It's pulling the relative financials, and it's doing it for me. And this is something that helps us identify value, and we use it quite often. You can get a 1-year license to it with the machine, and the machine closes tonight as well. So we have the lifetime access closing and the machine. But you get lifetime access as a bonus, along with 1-year access to this tool, the machine, from Mercatus, and get access to, you can just sit back, search your stock, and get the AI projection done for you. And it's there in the first link in the description below. So it's taking a little bit. It's doing our analysis. We'll see if it comes through with the Redwire analysis here. Sometimes it could take a little bit, but let's jump in. Oh, did it work? No, it hasn't worked yet. So last stock for the day. Keystone Giant Pumpkin says 400% on Super Microcomputer on SMCX. That's an interesting one. All right, let's take a look at Redwire. So Redwire, last conference that we went, we got to meet with some of the executives from Redwire. What we found was that they had just signed a deal to be one of 14 contractors in a $2.6 billion deal. Here it is. The iSpace maximum contract value of $2.6 billion through 2028. NASA created this CLPS program to support the creation of lunar economy through commercial deliveries of NASA science that will help prepare for the next generation of explorers. Redwire is one of 14 prime contractors on the CLPS IDIQ contract, and together with iSpace US, the team will be pursuing future CLPS missions leveraging the proven iSpace lunar lander. So essentially, their financials have looked really good over on Redwire. They have been volatile recently. We've seen them sell down to the support level of about a $7 price point. But we've seen them steadily build that market cap, and they've been volatile. They've had some runs up to $26, and now they're down here. And they're trying to hold this $8 price point and make a recovery back up here into potentially, we'll see, they're kind of consolidating here, trying to hold this level around $8 to get back up at this $12 range, about a 39% increase. Next level of resistance is at $10 a share. Closest support level is about $8 a share. And they're trying to make that run back up into highs that we've seen previously. We could even maybe see that 200% increase. And why is that? Well, with $2.6 billion on that contract value, market cap's at $1.25 billion. They're most likely not going to get that entire $2.6 billion. And to be honest, they haven't shown signs of massive growth on the balance sheet. Maybe the balance sheet just has become more disciplined. So what you could see here is in 2024 they had more liabilities than assets, and we wouldn't touch them, right? That's how it was. But then come quarter here, this last quarter in 2025, they surged their assets to 1.5 billion and their liabilities at 448 million. So they launched their total assets higher than their current market cap. So they have more assets than they do market cap, which again, that's one of those indicators we like to see. And then annually, you could see their revenue increasing from 2020 to 2024. They've gone from 40 million a year to scaling up to about 300 million a year in 2024. And so far in 2025, they're on track to do around 250 million to 300 million again. So they're a space company that is also in drone tech. They're in air tech. They do robotics. They do drug discovery and building out infrastructure in space. I don't really, I'm not too keen on the marketing and how they do a lot of like the 3D animation and stuff. It's cool. What I like and what I think they do well is their financials. I think they got their financials well managed recently, and so that's kind of why we like them. So we're looking at those support levels with Redwire, trying to jump back up in that $10 range, about a 10% increase potential. Solo Slick says QBTS D-Wave. There's also Roman saying Lumen, and Seeing Harm said Black Sky. I like Black Sky. I like Lunar as well, Lunr, related to Black Sky. Don't forget September, there'll be lots of selling. Oftentimes there could be. That's what who says that? Someone said that. Michael says that. I mean, we'll see. You know, it's not always the case. Sometimes it's the opposite. One thing that most people just fail to miss, fail to realize, is that while AI companies are at high valuations, the reality is the value creation is unprecedented. This is a time that humans have looked forward to forever, and we're in it right now. And there's a lot of great opportunities, and ones that we will make sure that you don't miss, whether it's in robotics, whether it's in space tech, whether it's in semiconductors, whether it's in the data centers or the drone tech, or could be new medical science or quantum computing. I'll make sure you guys get the best. And that's why we're going to the Quantum Computing Conference this week. Look forward to seeing you guys there. I'll definitely bring you some insights into the top quantum companies, like that one Solo Slick says QBTS. They're not there, so I'm not so sure about how much insights we'll have there, but we're going to bring it. And hopefully, as a result, get you not just good information here on YouTube, but also maybe incorporate some of that quantum tech into our analysis here on Mercatus. So it looks like, I don't know if it's high volume or what's going on, but it's not giving us the analysis on Mercatus. Let me give it 1 second, see if it works. Can it work? Yeah, because right now when you get the machine, you get the Mercatus app as a bonus. And so I'm wondering what's going on here. I know we had some higher volume usage today because we started releasing this machine. We relaunched it this weekend, and we've had the most volume we've ever seen as far as usage. So I don't know if that's maybe contributing to the how long it's taking to do the research for us, but I would hope that it would work. Maybe I can refresh the page. Let's try it again. RDW. See if it gets, or yeah, we could search any stock. RDW. So again, don't need to make a ton of trades, especially if the market's volatile, things like that. Want to watch it. Historically, after Labor Day, we see green. So just keep that in mind. We might have a green day tomorrow. We'll have a good idea at market open, and we'll be there in stock meet. Look forward to giving you guys any insights we uncover. If you ever want to tune on in, it's the second link below for stock meet. And it looks like Redwire, it's giving us the analysis. It's doing the analysis. Let's see if it pulls up, or maybe it's taking a little time. Wonder if it's not my internet. Should be working. Let's see. So Pumpkin says, is there a 2x leverage without an ETF? Yes, but it would be something through your brokerage where you would get the opportunity to use leverage through a brokerage. Otherwise, or something like if you're doing options, technically it's 100x because you're controlling 100 shares per contract. So when you get one contract, you're controlling 100 shares, which is kind of like why options are riskier when you're like buying calls, because it's you're basically, 1 cent is a full dollar per contract that it fluctuates for you. So if the stock goes up $1, it just went up, basically $100 for you, which could be a lot, or a contract. So that is what's going on there. Yeah, so the Redwire analysis, I'll talk with my team. Ryan, he's one of the best developers I've ever met, and I don't know if I know we had more volume today. That could be why it's slow. I'm not sure what's going on there, but I promise you, it's been a killer analysis tool and friend for me to get my analysis done faster. So I wanted to show you guys more of demo today. We did a full demo yesterday. If you guys missed it, it's the first link in the description. Hopefully I earned your thumbs up. Hit the like button, guys. Thanks so much for tuning in. If I earned it, go ahead and hit the like button. Do consider subscribing, and I'll see you guys in the next video tomorrow.